I'm going to tell you 6 property investment tips for beginners, and we're starting right now. What's going on? I'm Steph from the piu.co.za, and in this video, we will be looking at 6 property investment tips for beginners and how you can use this to help grow your property investment portfolio fast. If this is your first time here, start by subscribing and clicking the bell so you never miss out on another video or live webinar. Also, head over to the Facebook page where interactive discussions between members like you can ensure you stay in the loop when it comes to your next property investment. While you are there, check out the piu.co.za where you can join our mailing list to receive free updates on distressed properties for free. In times of uncertainty, property remains a safe and reliable investment. Here are some helpful tips to those new to the game. Tip number 1. Buy to let is the bread and butter of property investments. Buy to let is the go-to option for investors, allowing you to generate monthly income from properties in your portfolio. That's not to say there are no risks involved, but with careful planning, buy to let provides a reliable source of revenue in the long term. If the property is bonded at the beginning, you'll be using the rental income to pay off the bond on the property as well as whatever other expenses go along with it, such as maintenance costs. As such, the potential rental yield will be your primary concern when determining whether to invest in a property. It's important to figure out, and it's simple to calculate. The yield is simply the annual rent you're earning on the property divided by, expressed as a percentage. So a house worth 1 million rand, on which the annual rent is 120,000 rand, 10,000 rand a month, you'll be yielding 12%. You can get an idea of prospective rental yield on a property by looking at rental prices in other properties in the area. Generally, 1-bedroom and studio apartments make for a good buy-to-let investments, as those property types have delivered constantly over the last 12 years. Tip number 2. Consider buying and renovating properties to boost value. Purchasing older properties and conducting smart renovations to boost their value is another shrewd investment strategy, and one that happens to be quite fulfilling as well, as you are able to apply your own creative talents to the task. As a general rule, kitchen renovations are most effective at boosting property value. And it's often said that kitchens sell properties. They can get expensive though, whereas bathroom renovations provide a relatively cheap way to enhance the property's aesthetic appeal. Shop around for the best deals on bonds. In most cases, you'll need to obtain funding before investing in a property, which usually comes in the form of a home loan granted by the bank. However, each bank has a different lending criteria, some of which may result in more favorable interest rates for you. It pays to shop around for the best deal. This is made easier for you if you acquire the services of a bond originator. Bond originators can apply to multiple banks on your behalf. Take note of property types performing well in the market in your area. Property investors need to stay abreast of trends in the market, which can be affected by political and economical factors. For example, sectional title properties generally perform well in South Africa due to their popularity with students and first-time home buyers. Properties in gated communities also expect to perform well due to security concerns. Trends also vary by area. The current price deflation in the Cape Town market has been especially prevalent in upmarket areas like Sea Point and Camps Bay, which experienced a plus 5% decrease over the last year, according to the South African. This makes those districts ripe for investment. Tip number 5, but also diversify. That said, don't allow yourself to become too fixated on a certain property types or areas. Investing in a broad range of properties spread across different areas will make your portfolio less susceptible to market fluctuations. Tip number 6. Take it slow. Remember that property investments is a long-term gain and slow and steady alternative to playing the stock market. You shouldn't be in this industry if you're looking to get rich quick. It requires long-term strategy and planning. Selling properties is generally not advised, not even to fund the purchase of another property. The various legal costs, fees, taxes, and so on can take a sizable chunk out of the profits. So the smarter option is always, almost, to keep the property and use it to generate income in the long term. When you're ready to try your hand at property investments, bear in mind that we offer distressed properties, cash flow positive, immediate, directly to you free of charge. If you enjoyed this video and would like to see more, remember to hit that subscribe button. If you want, no pressure. And if you want to stalk us on social media, links to our Facebook and Instagram are down below. Hope to see you soon.